It's time now for the Gem Young Wealthcast. Brought to you by Gem Young Insurance and Wealth Advisors, a family-owned independent insurance and financial planning agency since 1947. Now, from their studio on Star Center Drive in Canfield, Ohio, here's the host of your program, Leo Daprile.
Welcome to the Gem Young Wealthcast. This is Leo Daprile. You know, we often talk, and you hear me say things like we talk about all things money. One of the things we want to talk about today is your money and insurance. We find that there's always many times a disconnect about how people manage their money and how they handle their insurance. A good buddy of mine, Warren Barhorse, just recently published a book. I'm going to look over to get the title for it. It's Opportunity at Risk. Warren's an accomplished insurance executive. Today, he works for the Higginbotham Company. He built quite a large independent insurance agency. And he talks about how people manage their money and their insurance in silos. He also talks about their CPAs in another silo, their attorneys in another silo. And the premise of the book is that there's an old expression that says shirt sleeves to shirt sleeves in 3 generations. Because that's what it takes, 3 generations for wealth to evaporate. So he did a study when he was at the Wharton School of Business, and his thesis was the family balance sheet. And he adds the 5th dimension of the human capital. So it's funny that he wrote this book because we had this on our schedule to talk about for quite some time, and his book recently came out. So it's playing into exactly what we want to talk about today is many of you out there listening today handle your insurance, your investments, your taxes, your legal work, all in individual silos, but making sure all of those are integrated and everybody's talking to each other, which is something we promote here at Gem Young Insurance and Wealth Advisors. But we find in many cases it isn't that way. So we're going to dive deep into that today, and I have with me 2 of my favorites. I have Stephen Daprile, and I have Denny White. He's our Chief Revenue Officer, and many of you know Stephen by now. He's the president of the wealth management firm. Hello, guys. Thanks for coming by today.
Hello. Thanks for having us. Good to be here.
Like I gave you a choice, right?
Yeah.
Let me kick it off this way, and either one of you can jump in from this. One of the most common issues that we see, Stephen, from a wealth management perspective, once we go through the fit process with a client, one of the things we do, and we're fact-finding, and we're gathering all the information, and we're gathering their insurance information, we find in almost every single case that they're underinsured.
Yeah, I would say the big thing that happens with a lot of asset accumulators is a gap. It's almost, I almost want to say cognitive dissonance, but I don't know if that's exactly correct. It's something.
That's a big word, buddy.
Yeah, I'm trying. But as their assets grow, I think people forget, and oftentimes they're not looking at their quote unquote family balance sheet. They're not looking at what their personal balance sheet looks like, and they forget how much they're worth, and they forget how exposed to liability that they can be.
That's a great way to put that. Great way to put that.
Yeah.
Like maybe don't adjust their insurance as their portfolio grows, so that there could be major gaps in liability protection because now these people are worth more money, and didn't adjust their insurance policies to account for that.
And I think it goes deeper because, Denny, here's the question I ask everybody when I see that, and I'm talking people that have accumulated millions of dollars and their liability limits are 100, 300. I mean, it's so disproportionate. So I ask the question, how come you have these limits? And oftentimes people maybe it's what they bought 20 years ago.
I just think you just don't know. You don't know what kind of claim you're going to have. So it's hard to anticipate what you need when you don't know what's going to happen.
So let's go back to risk. And this is what we talk about on the show. This is what we talk about with our clients. As you know, but just for the sake, again, for our listeners, risk falls into one of 4 categories, right? You eliminate it, you mitigate it, you absorb it, or you transfer it, right? And those are the basic premises of insurance. And as people accumulate wealth, there comes a lot more risk that they're just not thinking about, right? And it's not just the liability risk, right? I mean, I say all the time, with success comes complications. So you have to think outside the norm of maybe what you did 20 years ago on your insurance, right? And it's not just, oh, did I add that now that I have some means and I bought my spouse that $4,000, $5,000 ring. It's beyond those basics of blocking and tackling, but you're exposed to so many more things. It's not just the lawsuit, right? It's maybe if there's kids involved in the complications of your kids being reckless and you being sued, right? And not having proper limits because everything goes upstream because lawsuits go to where the money is.
Yeah, a catastrophic auto claim would definitely bring in mom and dad into the lawsuit for sure, and that's a lot of times when people are really paying attention to the cost of particularly auto insurance, because the cost of a young driver is so expensive now. But that's a great time to need the highest limits and want the most, because chances are that's when you're going to use it.
Denny, I'm going to tell you, kids have been expensive since I've been in this business.
Yeah.
Maybe in dollar terms, it's higher, but a pain point for a parent paying their auto premium, I think it's still painful. It was just as painful as it was 30 years ago.
Mm-hmm. And it just gets more unaffordable too,
All right. Well, people are also driving $60,000 cars, and their kids aren't driving the beaters like we did, right?
Yeah, beaters don't exist anymore, I don't think.
All right. Yeah. So it's all proportionate, right? You're making more money, you're driving better cars. But here, this is a perfect example of the risk. The increased risk and part of the family balance sheet, that Warren talks about, that he's put together in his book. So some of the issues that I see with this is not only is the underexposure, and sometimes it's people's attitude towards insurance, right? That maybe when they didn't have anything, insurance was that, I'll call it the necessary evil. But now let's go back to the four pillars of risk that I brought up. You get to the point that if you're grossly underinsured, you've accepted a lot of risk, just don't know it. And then what's that turn around and do in the event of a lawsuit? And negligence is negligence. Negligence is sounds like a harsh word, but many times it's an accident, right? It's not somebody being intentionally mean, but that's, I say all the time, if people didn't have accidents, we wouldn't have a business, right? So from that point of view, what else are you putting out at risk? You're putting your family at risk. You're putting your legacy at risk, and you're not even aware of it. And we talked about this on another show, Denny, that to properly insure somebody for their liability limits isn't proportionately more expensive, right?
Right. Yeah. So to increase bodily injury limits on an auto policy, or homeowners limits on a homeowner's policy, or your business insurance limit to the next step, or even buy some excess liability on something like that. I mean, in the personal line space, like home and auto, you're probably looking at like $20-$30 in total per year between both of those policies to get to the next rung on the ladder. And for business owners, I mean, you're probably to get another $1 million might be $200-$300 a year, something like that, in liability protection.
And we're not talking. This isn't focused to the multimillionaires. This is to the average person who's now probably 55, that's accumulated maybe $500,000 in their 401k and growing, right? That might live in a modest house, drive modest cars. It doesn't think of themselves as wealthy. That's who I really want to reach with this show today.
Yeah, for sure. I mean, I definitely think we're talking about, the regular business owner around Youngstown, Ohio, that's accumulated some wealth and is doing well for himself or herself. And imagine, like, if you hurt somebody or kill somebody or something like, or break something of somebody's of significance because of negligence in your business, like without the proper protection with that, like you could be financially completely wiped out, and you'd have to fold up the business because you didn't have the money to pay the claim. You mean like absorb it yourself? You know what I mean?
And there's other risks that come into play these days too. Another one that Warren talks about is reputational risk. Now, not that you can actually insure that, but you have to think about And reputational risk could be a messy public divorce, right? If you're a business owner and you're getting a messy public divorce, what's that doing to your business? So this isn't a show just about insurance. This is a show about protecting your wealth and growing your wealth, right? So what do you do if you're involved in a messy divorce? It's the really wealthy people are actually hiring marketing firms now to manage their reputational risk. Because it exists. It sounds ridiculous, I know, but it exists because we live in a right now world where everything's on social media right now, and everybody's guilty till proven innocent. We've flipped that switch.
Oh, yeah, that's a fact.
Right? So you have to combat that. You can't just sit there and take it, right?
I think you go on a cruise together and then she falls off the boat accidentally.
Yeah. Right.
Quote unquote. Accidental.
Not that you've thought about that. So Steve, weigh in here.
Yeah, so I actually wanted to kind of go back and make a point. You were making the point earlier about who you were trying to reach with kind of the thoughts on liability coverage. And I think since I am an investment advisor here, and that's certainly my level of focus here, it's important to note for those of you listening at home, and maybe you're thinking you're in this camp, maybe you're not, maybe you're just questioning it, just keep in mind that the last 15 years, we've been on a heck of a bull market. This is an unprecedented level of stock market performance. And to even be more specific, 2024 and 2025 were both 20+% years. So with all that being said, your portfolios, your 401ks, your outside assets, your IRAs, whatever it may be, your investment, stock market-based investment assets, and maybe even your businesses, and I would be willing to bet your businesses have all probably exploded in value over the last few years, disproportionately to how they may have over the last 15 years. And the nature of what you're looking at, again, is putting my investment advisor hat on, is the nature of compound interest is that's those 20%, 20 plus 20 equals 40, but that's not exactly how that works. And so 1.2 times 1 point, you know what I mean? Right. So there's a compounding effect here, where your overall portfolio, your overall estate, your overall balance sheet, you're likely in a position that you weren't in a few years ago. And if you're not taking careful consideration to this at this point an annual basis, and you're not being mindful of that, and not open-minded to have a discussion about it and ensure that you're doing the right things, you could be putting yourself in a position of risk that you aren't accustomed to, or maybe thought that you wouldn't be accustomed to.
Another risk people don't think about that we're seeing more of is second marriages. And back to this point that because of such strong performance, you have spouses coming into the second marriage with their own wealth. And another risk management strategy is a solid prenup. That's a hard conversation for people to have, right? Because it's business in an emotional relationship, right? But that's another strategy for wealth preservation. Because when we're in that situation, I say to people, this is number 2. It's not number 1. For whatever the reason number 1 ended.
Well, probably when you started number 1, like you didn't have a whole lot of assets and things like that. By the time you get to number 2, hopefully you do, and you're concerned about them.
Yeah,
that's why what we've been doing lately is with some of the money managers that we have, they now have on staff CPAs and attorneys. So conceptually, we can start getting our clients getting their arms around why having an integrated approach matters, because everybody needs to know everything. And I think some of the challenges, and I find this more with people that are humble, and I say that respectfully, that they don't want people to know their business. So they tend to tell people just what they need to know. But as their wealth continues to grow, that is a detriment. Back to the comment I made at the top of the show is with success comes complications. And you have to rely on a team, and you have to fully disclose to the team. And more importantly, and that's what we're trying to push through, is the team needs to talk to each other. because if people are just going to see their CPA without any interaction with us, or going to see their attorney without any interaction from us, you could have a highly competent CPA, highly competent attorney that's missing things because we had different conversations with them other than just the basic legal documents, right?
Mm-hmm.
So, Denny, most common gaps that you see.
Oh boy. I think this probably relates to commercial business insurance. It's like a lot of business owners don't know much about business insurance because they don't understand any parts of it. It's really not that complicated. Similar to like your property insurance policy, there is, if you own a building, there's coverage for a building. If you, like on a property policy, has premises liability, same thing with a commercial policy. That liability extends to like when they're working at somebody's house, let's say. So a lot of people are maybe just don't understand the pieces and parts of it. We can insure equipment just like you could, like a tractor on a homeowner's policy, things like that. People often think that it's extremely expensive, and it's really not, especially when you think about it in the grand scheme of things, like this is protecting your livelihood. So I get a lot of questions about business owners not quite understanding what they're buying or what they're getting or what they're at risk about or for in the commercial space. And I think in the personal space, like home and auto insurance, we see some hesitation with like uninsured and underinsured motorist coverage, people not understanding what those coverages are for. And we live in a world now where it's like so many people are uninsured that the uninsured and underinsured motorist coverage kicks in a lot more than it used to, because people might not be maliciously driving without insurance, but because there are so many online outlets to go do this stuff yourself, you may not pick that, or you may not choose this. So like really you don't have the appropriate insurance to be driving around, and then you have a claim, and now you're the other person involved with it. And now you got to get your policy involved because the person that hit you didn't click the right buttons on xyz.com.
And I think that's a great example of the point I'm trying to make, especially if you have a small business that's growing rapidly. Your coverage needs are changing rapidly.
Yeah, we want to keep up on that. We want to keep an eye on that.
But the business owners are focused on growing the company. Mm-hmm. They're not saying, "Jesus, is my insurance up to date? Mm-hmm. Do I have proper coverage today?" I don't think that. I'm in the business, and I don't think that. I come to work every day to run the business and do my job, right? Mm-hmm. And don't sit there and contemplate. I do come renewal time, I'm like, oh yeah, maybe I should be looking at it. So just because I'm in it, excuse me, I don't think I'm any different than anybody else.
And commercial insurance companies do put some parameters in place to force you to keep an eye on it, such as like commercial insurance audits. They just want to make sure that the rate that you're paying is appropriate to your gross sales or payroll or whatever they're rating that particular class of business on. If you're a place that sells tires and you sell 5 tires a year compared to somebody that sells like 50 million tires a year, like the guy who sells 50 million tires, exposure is a lot larger, so his commercial insurance premium is going to be larger, right?
Right. And so, Stephen, the financial risks of and people involved in lawsuits. Let's stay on the small business owner for a while. A lot of times, they're accumulating cash in their company, right? Because normally when they start, they don't have any. And then they start to build, I call it I do for myself, my war chest. You want a war chest for the rainy days, for any shocks that come by for the company, right? But keeping all of that money in the company sometimes isn't a good idea for several reasons, right? Cash, being cash, isn't growing anymore, right? It's just there, right? How are you, and this is another risk, along with understanding the business in its totality, making sure it's insured right is one part of it, right? But now they start having this excess capital in their business. What are you guiding them to do in that scenario?
Yeah, so my gut actually would my gut goes away from risk, and not gut, I guess my training goes away from risk, and my training there would probably go to something like opportunity cost, right? And I don't know if this is what you were getting at or not, but this is certainly where my mind goes is, philosophically, there's a certain amount that you would probably want to have on hand that covers a rational 3 to 6 months worth of operating expenses, or depending on your metric. You want to have a metric-based cash position for your company, in my opinion. And then anything in excess, I always like to compare it to kind of like a receptionist, right? Too much cash is like having 2 or 3 receptionists just sitting around the same table, right? A receptionist serves a vital job for your company, a vital job for your office, but having too much of it's not a good use of your resources, right? One of those people might be better in sales or service or parts, whatever your line of business is, right? So I always like to compare it to that. So I'm certain there's risks, and I'm sure Denny probably has a comment on that. But my thought is always, how can you get that capital busy to either grow or diversify, right? So should you be reinvesting it within your company, right? Are there ways that you could spend that excess cash over your metric-based cash position to grow your company, or do you want to diversify and consider an investment portfolio to mitigate your risk, right? So I guess it does kind of come back to risk, just in maybe a different light.
So add in the other professions, not ours, but other professions of things we think about. Disclaimer, we're not CPAs, we're not attorneys, but as your company grows, do you have the right employment agreements in place for the staff as you grow? Because as you grow, typically you're bringing in more professionals into the leadership level. What are you doing to protect yourself or your products, any patents you might have, to make sure that if that employee becomes disgruntled and leave? So again, it's not just about the investments or the insurance. These are all the other risks you need to think about. What if one of your key people, that's a public figure, all of a sudden, back to the reputational risk I was talking about, gets caught up in an affair and a public affair? Now there's reputational risk to your company. So there's a lot of other things. What if that key person's a family member, right? See, you have to start looking at all these different components other than the basics. That's what I want people to do, start to think more broadly than maybe what they have. So I got to hold it there. Believe it or not, it is time for break, and we'll get back and we'll keep this going after the break. Okay, this is Leo Daprile. This is the Gem Young Wealthcast. I'll be back after this break.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
At Gem Young Insurance and Wealth Advisors, we know insurance can feel complicated and overwhelming. That's why our team is here to listen, understand your unique situation, and provide solutions that work for you. From home and auto to life, plus a team dedicated just to commercial insurance, we help protect what matters most without the stress. Don't wait until an issue arises. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 to schedule your fit meeting and get the protection you need today.
At Gem Young Insurance and Wealth Advisors, we believe your financial goals deserve more than just a plan. They deserve a team. From planning for a work-optional lifestyle to managing risk and supporting your everyday needs. Our financial planners, paraplanners, and service team work together to build a strategy that truly fits your life. Planning for the future will help you make that confident financial decisions and achieve lasting peace of mind. Call Gem Young Insurance and Wealth Advisors today, 330-533-6936, to schedule your fit meeting and start building your financial future.
Now, back to the Gem Young Wealthcast, brought to you by Gem Young Insurance and Wealth Advisors. Once again, here's Leo Daprile.
Welcome back to the Gem Young Wealthcast. This is Leo Daprile. If you're just joining today, I'm here with Denny White and Stephen Daprile, and we're talking about the total risk management and financial planning aspects of your life. Many of these happen in silos. We see it. The genesis for the show was that many times when we're meeting with a client for the first time and we're doing a portfolio review, we're also looking at their insurance policies, and we find many of them are so grossly underinsured because they just don't think about it. It's not that they're just trying to be cheap and save money. They just don't think about how their insurance policies should be interacting with the wealth that they've created, which also spills over to making sure their CPA knows everything that's going on, as well as their attorneys to make sure the types of legal documents they may need because of their success may have changed dramatically. Also, beneficiaries can change. There's so many things that shift and move. So my goal today is to talk about all of these things and hopefully start breaking down people's thinking of living and functioning in silos and why this is so important. That's why our firm, Gem Young Insurance and Wealth Advisors, focuses on the holistic approach. I know that sounds like a nice word, but it's something we really do because we recognize these problems. I mean, we've literally taken clients to their attorney's office because the clients have said, I know what you're asking me. I don't know how to ask it. Do you mind coming with me and explain to the attorney what I need? And we do that. We have conversations with them. We routinely talk to our clients' CPAs on methods for distributions for once they get to their work optional lifestyle stage so that the CPA is aware of what we do, because many times we have found that people make decisions about what they want to do with their money, then tell their CPA, and in many cases don't like the answer they get from the CPA, but the CPA can't do anything because you already did it. So that's about and the objective here is to preserve, grow family wealth, okay, and not let the outside forces diminish it unless it's your choice to diminish it, right? So that's kind of what we're doing. That's what we're talking about.
I think another key piece of that would be life insurance too, that we haven't touched on yet.
Right.
Absolutely.
The importance of life insurance, making sure the beneficiaries are correct on life insurance policies, understanding that while you're working, you may have some life insurance coverage at work, but what do you do after? What age am I gonna be then? Will I be able to qualify? Things like that.
Denny, I have said for decades that the need for life insurance never goes away, but the reason you own it changes. And people adapting through their life. Steve, we talked about this with you and Sam on one of our episodes of, what is an effective strategy for a young person. So again, people kind of get where they are with that decision point, and it could be 20 years later, and the reason to own it can change. For instance, threats to an estate could be an extended nursing home stay, which we've talked about before on previous episodes. And then how do we insure for this if we can, if they're healthy enough to insure for, and other strategies to do it. But again, that's why when we build a plan, we can't operate in a silo and say, okay, here's how we're going to manage the money based on your financial plan, and let us know what you talk to your attorney or your accountant about anymore. We can't think that way. We have to say, let's get everybody on the same page so that they all know. Steve, there's many times too when we meet with a client, once we build the financial plan, we'll send, with the client's permission, of course, we'll send that financial plan to their attorney and saying, this is their family balance sheet.
Yeah.
Right? So that when it comes time for document design, they know what we're thinking already.
Right. Yeah, I think that's very important so they could start. Again, we're not attorneys. I think we know loosely how certain different types of legal elements can, estate planning strategies and vehicles can fit into a plan, but I think it's always best in an attorney's hand, and I think it's even further best with a collaborative effort, right? I always like to say that, it's good that a financial planner plays quarterback for kind of your financial needs, right? There might not be a professional at everything, want to necessarily ask me about your limits for bodily harm or, how, what company is best to insure this or that. But I always think it's important to, I'm sure doing business with me, Denny, it always helps to put a collaborative effort and talk about the client, per their permission, and just design things more specifically. It helps me when I know you send people my way. So,
well, it's important. So if we don't go to Denny and just say, hey, here's client X, they are worth X, they need this. That's one of your many questions, right?
Well, it's like I know what's best if you're asking me that question, and maybe that's the reason why you're coming to ask it to me too. It's like there's plenty of stuff that I have no idea about what you guys do, and vice versa too. Like where let's work together to come to a collaborative decision, more than just like you do this and I'll do that.
For sure.
And we're going to find out things, because as financial planners, we joke, but it's true. And it should be this way with your insurance agent too, is, if you don't tell us everything, we could really wreck you unintentionally. We could be way off base with our advice. So once we finish building out the plans that we do, then it's easier to go to you and say, Denny, not only do we need to talk about, what their auto, home, or business coverages look, here's some unique assets they told us about. Right? And how do we handle these unique assets?
Yeah, like a gigantic gun collection or whatever, you know what I mean? Or
right.
Rare coins, or maybe like I have a client of mine that's got like hundreds of thousands of dollars of antiques, and protecting those was at their top priority list, So if you don't ask the questions, you don't know that the people have the stuff, and you can't insure for it appropriately.
And then so we find out about it. We talk to you about insuring it correctly. And then we talk to the attorney about, okay, when they pass, what do we do with it? So, right, that all the stuff along the way that goes along with it.
Right.
You know, that's the sort of collaboration that I'm talking about that a lot of people don't think all the way through. Okay. And that's why it's good to do. We're doing this with some clients now where we're just navigating the entire process through. They're actually relieved. And part of the reason they've put it, and they're in their late 60s, and part of the reason they've put it off, they're bright people, they're enterprising people, they're very successful people, but they've put it off because the task is daunting. They know they need to do it, but they're like, ugh, I don't know where to start.
Another thing that people hate to discuss is like their will and their last wishes. And like, as far as wealth preservation goes, I think that's a critical piece to make sure that you have your affairs in order, so that when something does happen to you, that all these things that you've accumulated over your life get allocated to the right people without a bunch of government involvement or court involvement.
And
that's a great point.
That's
a great point. Yeah, and I think I see that all the time. Where people, there's some people who I'm like, I bring it up to, and it's the kick in the butt that they need to finally go do it. And there's some people I've been hounding for years, and they're having a hard time. People have a hard time rationalizing and wrapping their head around their own mortality, and particularly younger people, right? People who aren't really, and by younger, I just mean like below 60, right? Maybe below mid 50s. People have a hard time coming to terms with that and getting the right work done to do that. It feels like a 50-50.
Heirs will be sorry if you didn't do that.
Amen.
We talk about that all the time. In fact, Denny, one of the things we're pushing more now as some of our clients age, we're promoting family meetings. And most are receptive to it, but most don't know how to do it. So we're actually the facilitator of these meetings, so that everybody's on board with what mom and dad's wishes are. Because the other challenge too, as people are accumulating means, we've talked about this on other shows. This isn't for the 50 or 60-year-olds, but people that are getting into their 70s, whose wealth, to Stephen's point earlier in the program, because we've had such strong stock market performance, conversations we have a lot more now than we did 3 or 4 years ago is legacy planning. They are leaving a legacy. It's the way they're wired. They're not going to spend it. We know it. It's going to keep growing. So it's pushing this even farther. And this is the generation that's also, also grossly underinsured because their wealth just in 5 years has just exploded, right? So we're finding that even though you might think you're in those golden years and the work's done, to your point that it's probably more important as you're getting closer to dying that you make sure that you have all of this protected, right?
Right.
So,
And new risk center when you're entering that stage, right? Your assets might have exploded, you might have accumulated a lot, but it might not be enough to say self-insure a long-term care stay, right? And you still might be healthy enough, and I find this sometimes where it makes sense, where people have excessive pension and Social Security income, especially with what happened with the windfall provision. People are having more income than they thought, right? And they still have the outsized risk of extended nursing home stay and inflation on that being like somewhere between 6 and 10%. So it's just investing in the market isn't necessarily getting you there. So that's I mean, and I'm sure Denny knows a lot about that. I know he's worked in that for a while, but that's certainly one of the new risks is your wealth is accumulated and you kind of turn that page into being a retiree that you should be considering.
Yeah, it's like if only we knew how your golden years were going to play out. Like we could plan for it perfectly. The unknown, we're just trying to put the best parameters in place that we can to hedge most bets of what's going to happen to me when I get old.
And let's talk about risk again, since you said it's so uncertain, and that's kind of the point of all of this. We talked about this on other episodes, but I keep bringing it up more lately. I'm thinking more in terms of frequency and severity of what can happen, right? Whether it be your business, whether it be your life, whether it be your health, right? We've talked about that the probability of becoming disabled before 65 is much greater than the probability of dying, right? Mm-hmm. So think of this not just from your earning capacity point of view, but let me throw this back to the small business owner that has maybe 10 employees, but 2 are super critical, to the business. That may have been with them since they started. They know everything about the business. And if that person has a heart attack or dies, what have you done to make up for that person? And how much of your business did you put at risk by not having a disability policy for that key employee?
Key person life policy.
Key person life insurance. That's where I was going with it. So that says, okay, how do I, make up for the revenue that may have stopped?
Right.
How do I have the money to go find somebody quickly that I can pay, right? Does the owner of the company have his own disability policy? Because here's what I say about owners and disability policies. We talked about this on another program a little bit too. If you own a company and something's disabling you, you're not going to just sit home and say, well, I'm just going to go home and collect my check. Mm-hmm. You're going to drag yourself to work.
Right.
And if you can't drag yourself to work, you're really in bad shape, which means you could be out for that extended period of time, right? And that's when your business, that's when your business is most at risk. Mm-hmm. I've had clients, and it's only been one situation where it was a very successful business, no debt, lots of cash flow. And I said to the owner, you need some life insurance in the event something happens to you. And he goes, well, no, there's plenty of cash over here. There really wasn't as much as he thought, or as much as he thought he needed. And he goes, besides, my mom's old and she's going to die and she's got a bunch of money. I got a big inheritance. His wife pleaded with him. It's a true story. 6 months later, he died of a heart attack on his couch. Mm. His wife ran, she was the operations person of the business. He was the namesake, third generation of the business, right? So after he passed, all the clients, and it was in the construction trade, and this is years ago, and they were men in the construction trade, weren't really interested in dealing with a woman. Sales went down like 70% because they just wouldn't deal with her. Business ended up closing. There wasn't enough money because what money there was, she kept trying to feed the company that was losing money. Mm-hmm. So this was shirt sleeve to shirt sleeves in 3 generations.
Yeah.
Right. And now the two kids I thought they were next in line for the business are out trying to do their own thing and rebuild from that. So, these aren't academic discussions. These are real life experiences that we see. He never thought, and he was 46, by the way.
Wow.
Yeah.
Yikes.
Yeah. Just said, I'm coming into work a little later. I don't feel good. My stomach doesn't feel good. I'm just going to lay down for a little bit. She found him when she came home for lunch because he never came to the office.
Jesus.
Yeah. So it's not a big dramatic wreck and all that other stuff. It's just a real life story of something that really happened to a long-standing business in Youngstown. And it was, like I said, a large business. So, so these things happen, and you have to be prepared for them. I always have been. I think just because I've been in the business, and I see what, beyond my auto and home insurance, Denny, one of the things we didn't talk about personally is umbrellas.
Yeah.
And that's probably, in my opinion, that's always been the cheapest insurance policy you can buy.
It probably really is. When Leo says about umbrella policies, he's talking about excess liability. So what that does is it puts more liability onto an underlying policy. Let's say your business policy might have 1 million, 2 million limits, and you might buy an umbrella for 5 to get some excess liability on top in case of a catastrophic event. And same thing with personal policies like your auto and home. As you accumulate assets and as claims become more expensive, you may exhaust your auto or homeowner's insurance policy quicker, and that would give you extra protection in a scenario like that.
So, Steve, here's the financial planning answer to that. If you have a liability limit on your auto policy of $500,000 and you buy a $5 million umbrella policy, essentially that policy has a $500,000 deductible.
Right.
Okay. So
higher the underlying limit, the less expensive the umbrella is because you're getting a bigger deductible.
That's right. So it only kicks in after $500,000. So back to frequency and severity. It's not going to be frequent, but if it's severe, that's what it's for. So
right. So and if let's say you don't have that, and you have a terrible accident or something happens where somebody gets hurt or dies in an accident, and you exhaust that $500,000 limit, which is probably higher than the average person has, then you become personally responsible to pay that. So it's like, do you want to transfer that risk to the insurance company, or do you want to absorb that risk personally?
And here's some real world experience. I have found, even though your assets are exposed, but if you're worth $3 million and you're insured to $500,000 and you lose a lawsuit, they're coming after your personal assets.
Oh, yeah.
If you are worth $3 million and you have a $3 million umbrella, they're taking the insurance. That's where it stops. Because to get to those personal assets is a lot of work. And if there's not enough coverage, they'll do the work. But if there's adequate coverage, they won't.
Well, they'll sue for the limit,
right?
Most of the time.
And if you're adequately covered, that's the whole point. Now that you're still protected, but if not, you can unravel that whole thing quickly.
Yeah. Believe it or not, that's probably the biggest thing biggest insurance policy I refer out is probably umbrella policies, just for the reasons that we've been talking about all day. People have the biggest. When we look at a deck page, it's fairly, a lot of the specifics is certainly over my head, but things like liability coverage, that's where my eyes go. And then I look at the financial plan and the balance sheet, and I look at their net worth, and if there's a large gap at all, it's worth a discussion with a professional.
Right. Or again, if they're disclosing unique assets to us in the fact finding.
Yeah.
Right.
Right.
And a lot of times, to Denny's point, the gun collection, some people think about it, but do they think about it in totality? Because, if you end up with, I'll make it up, 50 guns over time, you buy them one at a time. So you don't think in terms of 50.
Well, too, like people are under the common misconception that they don't need to specifically insure a thing like that. They just say, oh, I have house insurance and these things are in my house, so they would be covered. We talked about this before, but insurance companies put limits on certain things to control the cost of insurance, period. things like jewelry, things like cash, things like art, things like guns. Because if they didn't put limits on certain things like that, I'd be like, well, I had $3 million under my bed before the house burned down, so I'm going to need that money plus, rebuild my house. So, it doesn't work like that.
Right. It's right. That's all for protection. So, but again, you have to know and talk to all of the professionals that are involved. So, Stephen, is there anything else that you're seeing from a financial planning perspective or advice that you're giving clients in terms of the holistic approach to things?
Not as much specific advice as much as trying to coach people up on seeking outside resources when it's either prudent, neglected, not thought about, or otherwise. It's something that I've been really trying to focus on lately is doing my best to holistically look at everything, understand that I only understand it so much, and try and refer out when that's been appropriate.
Awesome. Denny, any final thoughts?
I think Steven's right on point with that. It's like use your network of people that you rely on, accountant, attorney, financial planner, insurance professional, to set up your business the right way, talk about your will and your last wishes and your insurance policies and what may be at risk and what might not be.
Awesome. Mm-hmm. All right, boys, I appreciate you coming in today. It's a good conversation. So,
yes, sir.
Thanks again, Stephen Daprile and Denny White.
Thanks for having us.
Okay, this is Leo Daprile. This is the Gem Young Wealthcast. I'll be back after this break.
At Gem Young Insurance and Wealth Advisors, we know every financial journey is unique. That's why our team of financial planners, paraplanners, and service professionals work together to provide personalized strategies for a work-optional lifestyle, investments, and risk management. We're here to help you plan for today, protect tomorrow, and enjoy the life you've worked so hard for. Take the first step toward financial confidence. Call Gem Young Insurance and Wealth Advisors at 330-533-6936 to schedule your fit meeting today.
Hey, it's Medicare Jer here from Gem Young Insurance and Wealth Advisors. Medicare can feel confusing, but I'm here to make it simple. With the right Medicare Advantage or supplement plan, you can worry less about unexpected healthcare costs and focus more on enjoying life. Let's make sure you've got the coverage that fits your needs and gives you peace of mind. Call me, Medicare Jer, at Gem Young Insurance and Wealth Advisors today at 330-533-7941 to schedule your appointment, and let's get your plan in place.
By calling this number, you will be speaking to a licensed insurance agent to answer your questions or provide additional information about Medicare Advantage plans, prescription drug plans, or Medicare supplement insurance plans. This is an advertisement for insurance.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
Now, back to the Gem Young Wealthcast, brought to you by Gem Young Insurance and Wealth Advisors. Once again, here's Leo Daprile.
Welcome back to the Gem Young Wealthcast. It's Leo Daprile. Great show today. Thank you, Stephen. Thank you, Denny. There was a lot of good information. It's surprising, isn't it, how many times we don't think about how all of the different pieces and parts of our financial plan, our taxes, our legal work, all integrate, and sometimes we don't think of it from that holistic approach. We do, and we see the gaps. And again, the purpose of the show was we see it a lot. So this isn't a one-off for us. I'm going to say most of the time people coming in, their insurance limits are too low. There's a lot of coverages that are missing because, quite frankly, when I ask the question, it's an autopilot scenario. They're just used to paying it. They think it's enough. A couple of quotes from Stephen and Denny I thought were interesting. Stephen says, a financial plan without protection isn't a plan, it's a risk. Denny says, insurance isn't an expense, it's a safeguard to everything you've built. That's the way you should be looking at it because you've worked so hard for it, and we can see it go away so quickly. In some cases, we've seen it. and I gave an example of that on the show. So a lot for you to think about and unpack. There's a lot here on the program that I thought these guys did a good job of helping you kind of see the bigger picture of what really goes on and how this all works. And I'll be honest with you, it's a lot of work. It's a lot of time to make sure that you have everything done right. It's a lot of integrated professionals to talk to. So you think about what we talked about. We talked about your financial planner, your CPA, your attorney, your insurance agent. So there's 4 people that you have to integrate and make sure everybody's on the same page. That's why we've taken the approach that we quarterback these things, because it becomes daunting to a lot of our clients, and it leads in many cases to inaction. Not lack of desire, just the gravity of the work that they have to do. So that's part of what we do, and that's why the insurance and the wealth companies integrate with each other, because they're so intertwined. So that's 2 of the 4 pieces of the puzzle that we can handle in-house. And we have great relationships with local attorneys and CPAs that understand how we do business and how we work and what we're trying to accomplish with our clients. So that's also a help with that integration as well. And it just makes it easier for the client, because at the end of the day, this all has to execute. Your plan has to execute. So it's not just having the work optional lifestyle. That might be the aspiration of where you start and what you achieve. But what happens down the road? What happens if there's a liability event? What happens if there's a death? What happens if there's a nursing home stay? All of these things come into play, and they're all issues we have to work out, and that's what we do for you. So I thought it was a good show today, and again, I appreciate these guys coming in. So it was a great show today. I appreciate you listening. This is Leo Daprile. This is the Gem Young Wealthcast. Until next time.
At Gem Young Insurance and Wealth Advisors, we make planning for your future simple by offering both insurance and wealth management under one roof. Our team helps protect what matters most while guiding you toward your financial goals, whether it's safeguarding your home, health, business, or planning for a work-optional lifestyle. With everything in one place, you get seamless support, personalized strategies, and peace of mind. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 today to schedule your fit meeting and experience all-in-one protection and planning.
At Gem Young Insurance and Wealth Advisors, we know insurance can feel complicated and overwhelming. That's why our team is here to listen, understand your unique situation, and provide solutions that work for you. From home and auto to life, plus a team dedicated just to commercial insurance, we help protect what matters most without the stress. Don't wait until an issue arises. Call Gem Young Insurance and Wealth Advisors at 330-533-7941 to schedule your fit meeting and get the protection you need today.
At Gem Young Insurance and Wealth Advisors, we believe your financial goals deserve more than just a plan. They deserve a team. From planning for a work-optional lifestyle to managing risk and supporting your everyday needs. Our financial planners, paraplanners, and service team work together to build a strategy that truly fits your life. Planning for the future? We'll help you make that confident financial decisions and achieve lasting peace of mind. Call Gem Young Insurance and Wealth Advisors today, 330-533-6936, to schedule your fit meeting and start building your financial future.
Join me every week where we talk anything and everything about your money. Have a topic you want to hear more about? Email Katie, that's Kayti, at gemyoung.com. You can find us on Apple, Spotify, and the iHeartRadio apps. Until next time, this is Leo Daprile.